Welcome to the Flow Tracy Money Audio Commentary. This is Owen Tracy recording. It's 4:09 p.m. That is Central Time. Today is April 29th. Well, we're towards the end of the month, and it's been rather busy for me today, so I'm recording a little later than normal. I delivered a little talk for the Accredited Investor virtual conference for the Money Show this morning. And since then, I've had several other meetings, particularly for investment committees, and talking about, well, what's the outlook? And, well, the first thing I saw this morning when I turned on the Bloomberg was Scott Bessent at the White House press room. And that was all I needed to know, that we were going to have a positive day for both bonds and equities. It almost feels like that the market has a pair of angels sitting on either shoulder. One is a benign angel, one is less than benign. And certainly Scott Bessent is viewed as, by the bond market particularly, as one of their own. So whenever he is being profiled on the media, then the bond market tends to rally. What it very clearly suggests is that Scott Bessent is viewed by the market as a voice of reason. And that may or may not be true, but it's certainly the interpretation that the market is running with. So 10-year yields were down another 3 basis points today. And the rate right now is pretty much where it was in September of 2022. So we continue to see that the Trump administration is sensitive to the bond market. And today there was an executive order written, or I guess signed, as basically giving some ease to the automotive industry, which really is one of the center points of the tariffs in the first place. So it does raise the prospect that by the time we get to the end of the 90-day hiatus on the additional tariffs, which is going to be July 4th, that will be then used as a pulpit to really claim that some great progress has been made in leveling the playing field for the US economy, and that there won't be any need for additional tariffs, and then everything can go back to normal, perhaps with the exception of with China. That, I think, is the working hypothesis for what we're seeing right now in the broader market. So what we saw today was that the treasury market was a bit steadier, the dollar was a bit steadier, stocks were steadier, but commodities were lower. And I think it is a good time to look at some of those